Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?
Alright, so hi guys, welcome again to the channel. For those of you who are new to the channel, welcome aboard. Here is where we talk about market profile. So again, for those of you who don't know what market profile is, well, the easiest thing to do is to take to Google. But of course, we talk only about market profile here because we know that market profile is the dominant way that institutions and large trading houses trade. Rarely do you see people using candlesticks. What you would see a lot of is market profile, footprint charts, order flow, so i.e. level 2 depth of market, time and sales window, depending on what asset class they're trading. If you're a futures trader, you're going to see a lot more use of market profile because it has its roots and its applications in the futures market. Obviously, if you are an equities trader, you're going to find yourself looking at more at the tape or what's called level 2 information, correlating that with time and sales, and potentially some use of a profile. I found the profile incredibly instrumental when I do when I sell option premium, which is something I also do here, and I do give you guys some snippets into that because I am someone who believes in the fact that trading should be able to provide a certain degree of stability. It shouldn't be a wild ride all the time. So for me, in my journey, I've really tried to make that work in my favor. Of course, I have an institutional background. I used to be a broker, I used to be an analyst, and you know, I have traded on a professional level. So of course I also used to be a physical commodity trader. So I've had a lot of my career built up in the financial space, and as a consequence I tend to have a different outlook to markets than maybe most people who approached it a lot more from the rose tinted perspective. So things like managing a position, trading with appropriate sizes. It's not even a thing where you're thinking, oh, how relevant is it to capital? So I have $1 million, I'm going to go crazy. What I know that when you trade with a specific time frame, so when you think about maybe the longer time frame window, you get a lot more information there. The price action is cleaner, but it does mean you'll have to accommodate, in other words, a lot of volatility. And that means that positioning is going to be key, so things like trade location. And it's one of the reasons, guys, that we use market profile here. Anyway, that was, I think, an intro for people who are new to the channel. But I think for people who've been here a long time, then it's just another video, guys. I'm going to be talking to you about my positions, what I'm doing at the moment. And I'm always keen to just give you a brief flash of my P&L on the screen so you can see how I'm positioning, diversifying my portfolio, so that even though, and I always say this, right, you don't need to trade big to make money, right? Again, what you need to be able to do is know what you want to trade, how much you can make from that asset class or group of asset classes that is going to be reasonable or justifiable to the risk you're going to allocate. So your risk adjusted returns, you want to make sure that, you know, this stuff adds up, because otherwise you're going to be risking way too much, and the long haul you're going to get crushed. So even if it looks like, and it's very common with those Lambo traders, you can always see that obviously they're risking quite a lot. It's a big gamble, and you know, gamblers do make money sometimes, and that's the reality of this business. But you have to have a particular kind of psyche if you're going to have a gambling mentality coming into trading. And if you do, then be prepared to take massive losses, potentially get wiped out, you know, tears, you know, blaming people. This is all results of trading too big in order to make big in a very short space of time. I know this stuff brings clicks, it brings views, it brings all kinds of things on social media, so people do it. So in this channel, my job is to just take away all of that, those rose tinted goggles, and show you how it really is, how you could make a potentially really good income on a regular basis, but you have to know what you're doing and you have to know how you want to position in these markets. It's a broad space, guys. All right, moving on, let's take a look at today some of the stuff that we're doing. So we've spoken about the Aussie dollar. Now, of course, we do have a bid stack here. We have a bid stack here, so we've got the support level building. You can see how that's held up pretty well, and obviously we're testing that again and we're finding trouble breaking it. Now, I am structurally bullish on the Aussie, so I'm expecting an upward tick, right? And we do have a gap in value, so that is an arbitrage that needs to play out. We've seen the shorts pressing incredibly hard at these low levels. In my opinion, it tends to be traders being trapped, and we can tell this because of all the stacking, right? But we're not. Again, one of the key concepts of market profile is understanding how well the other side is doing. So how well are the bears doing? How well are the bulls doing? We can clearly see the bears have done pretty well over the past 2 weeks, but they're not doing so great now. And we can see that the bulls are probably sensing some weakness here, right? So psychologically, as a bear, you're probably not in a great position if you're getting short now, because whilst you might be in some gain, it is still, you're going to struggle a little. So what you're potentially looking for now is for things like value trades, for example, like a revisit of the value area, trade for the gap, inefficiency. So these are the kind of things I'm looking at. So I'm structurally bullish anyway, because when we look at the macro picture, when we apply structure to this, so when we think of the longer term frame, these are weekly profiles, so I can see everything within one viewfinder. I'm structurally bullish. Crude oil, I have a position on this, as you guys can see, P&L flashed on the screen. I've got a bid stack. I'm sitting here. My confidence came from the responsive buy. I was in early, had some clips on the long side. I have added to that. I did say that on my last video, that this was a great level to add, primarily because we're looking at a value trade. So I'm expecting us to at least take out the 2-week value. And like I said, once that happens, I'm expecting some extension. So it's a good play for my longer term core positions, but it's also a good play for my short term value trade, so I can maximize on that position. So it allows me to just leverage a little bit more, but bearing in mind, I've offset a lot of the risk into that because I'm also long on the S&P, and I've got a really good move on that one, which is what I'm going to talk to you about now. So again, I did say that we're consolidating here. We had some responsive buying. Structurally, I was bullish on the S&P, and then we had this upward break. Pretty much we did the range last week as expected. We retested the range high, and then we're kind of tethering around here. To be honest, market open in the US, if we were to break upwards and take out the H period high, it's all over. I think we're going to get a really big extension. So we're in a bullish framework with the S&P, potentially 4.3, 4.4. So there is some room to run here, which is great for my option positions as well, because I primarily sell premium, right? So again, because we're expecting the bullish move, I'm selling premium against the fact that this market is not going to go down. So it is presenting a really good opportunity for me, right? So pretty excited about this one. Let's see how it goes. We do have a gap in value here, so if this does come down in the week, we do have a bid stack. It will be a buy the dip scenario for me. I am not bearish for the 3990 level, which was the absolute downside. I think the S&P has well established itself on the highs. We could break down, but any dips would be a buy the dip scenario. So just pay attention for the gap fill, really, because we could see that this early part of the week, which would see everything running up more or less, with the exception of probably the stronger equities. So I'm still bullish on the S&P, so I'm keeping my position in this one. Gold is working against me at the moment. I was looking for a value trade to finish off the week. However, it looks like we're dipping lower. Again, there was always that risk there. I did actually say that I'm expecting that we could end up doing a gap down here, which is an 1800 gold. So maybe this still does play out. I think the key level still remains these particular 2 weeks here on the profile. This is the support for me. If we come under this, we're basically entering new value. It will change the game completely. We can clearly see that here, that we start to approach new value at these levels, right? So again, understanding how to work against historical value as well as mirroring that with order stacks give you a very good idea. So again, once we start to get into this zone, then expect 1900 an ounce. So everything hinges on how we trade this week. So again, risk wise, it makes sense to be at the weekly lows and then see what happens. If we bounce off this and then trade through value, then hey, I'm a genius. But that's the reason why we need to have really good risk management. So again, cable, don't have a position at the moment. I did take those positions off, as you guys recall from last week, and when I didn't get that gap filled, we started a retreat. I'm still structurally bullish on the pound, so again, very similar to the Aussie, I think we do need to see some serious buy intervention. So again, I would just pay attention to this one. So this bearish move, I'm not expecting it to last. Bullish dollar yen structurally, of course, this is running. We do have a gap in value, so when we do retreat, we're going to get a really big swing back on the dollar. So again, I'll position for that, for that point where we see that dollar weakness, especially if we're trading back down here towards the end of the week and attempting to go through value. It becomes quite a nifty short. Again, it will still be a buy the dip scenario for a long-term move, so I like to go in the direction of the macro structure. So once again, we can see that once the inefficiency gets filled, it will be an interesting level, in my opinion, for us to sort of buy the dip. Dollar CAD, structurally bearish, of course, but we have built a bid stack here, so I'm actually looking to see what we do. There's a possibility we retest 136, but I'm paying attention to that one. We're getting some rejection now within that value, so it's actually really interesting for me. If I'm going to re-establish a short position on dollar CAD, I'll need to see us take out the bid stack that built up, because that would suggest that buyers got trapped, and the margin calls are going to be so heavy, I think we'll crush down very quickly into sort of 132.90s in no time. Bitcoin, I've always been waiting for a bit more of a dip. I'm not convinced with the upswing. Could be a value trade here, but we have a nice little offer stack, so let's see if we beat that first. We could see Bitcoin a little bit weaker. I would only be interested in it if we can come into the bid stack about 124, basically about 25k. That's kind of where I want to be. So really interesting there on Bitcoin, but I'm holding out for this. I'm structurally bullish on Bitcoin, so I am expecting that we do get some upward moves, but for now, I'm just going to watch this space. Sterling yen, structurally bullish. I've actually just taken my position off on sterling yen, so if you want to see where I was on the last video, you can have a look. So I've banked some profits, right? So again, this is the important thing. It's to be able to put cash away when it looks. So I had a really good run on this. Really great return, had a good structural play. I got this really early from the W prints as we retested those value lows. I did say to you guys that it's a good time to buy it, to get long, and we've had some nice moves, including a value trade, and now we're kind of struggling up here and we're back within this value. What that does is it says there's a potential that we can crack lower. It's still a buy the dip story for me because I'm structurally bullish on sterling yen, but even at that, I don't want to kind of give away gains. I think it will nicely hedge out my portfolio, especially with my gold position looking a little bit iffy. So it's a great way to balance it, so I'm not really losing any money. So I'm up on my overall balance. However, I'm also up on my overall equity, but it was nice to take some off the table and kind of shore up that balance. Remember guys, P&L, there's a difference between realized loss and unrealized loss. So if you've done your risk management right and you're hedging your portfolio properly, your unrealized losses should hopefully start to turn into something like break even or unrealized gains, right? So we want to be a bit more patient with our positions, and that's why I prefer to trade on a longer time frame but executing within the intraday window. And that's one of the things that Market Profile does for me, is it allows me to kind of visualize where we are in the short-term window but also using a macro frame, right? So once again, I've taken some money off the table with sterling yen. I think it was important. I am again with the Kiwi, a similar scenario with the rest of them. It was nice to kind of stay exposed to that that commodity dollar risk, but to be honest, it's not looking like it's worth it at all. But again, we're hitting this bid stack now on the Kiwi, so again, we'd like to see this build up before we go higher. Again, I'm structurally bullish on the Kiwi. This is actually a really interesting setup, and it's really giving me a correlated sense from when I review all my asset classes that we could get a big move today against the dollar, but we'll pay attention for that and see what happens. But all in all guys, hope you enjoyed the video. Once again, don't forget to like, subscribe. Let's grow this channel. Again, it's the only place you're going to come and get a real perspective, in my opinion. There's just so much stuff out there on social where people are not interested in showing other people what the real deal is. It's just about Lambos and stuff, and if you've been in the industry long enough, you know that that's not the case. when I was in the brokerage business, I think, you know, you could literally say, give or take, maybe 10% of the guys in the you know, had accounts that were actually making, like, you know, some serious eye-popping, you know, numbers. I mean, the rest, everyone was just, you know, just trying to get by, and that's the reality of it. So again, it's just about exposing that and showing you how you can do it, how professionals do it, so that it feels worthwhile and they're always taking money off the table and it seems like they're making this endless amount of money. It's not the case. It's just that they manage portfolios well, they manage their risk, they diversify. There is no information edge anymore, so you can't really say, well, I got excess information, that's why. I mean, you can just buy information now. But anyway, guys, like and subscribe to the channel. Let's grow the word. Till my next video. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?